Do you really think you'll learn and grow and achieve without failing? Maxime Lagacé. My friends, failing is okay as long as you are learning by doing it. And that is through practice trading and fractional trading where you're using small dollar amounts, say $100. Once you get good, feel like you're getting competent in the paper trading. And whenever you're experimenting with new ways to trade, new techniques, then of course, what do? You either paper trade or you fractional trade. What's so good about fractional trading? Again, with a small dollar amount, like $100 on the S&P 500, if your broker will let you use fractional shares, that means that if you lose 5%, it's $5 of 100. It's not tens of thousands of dollars that cripple you by doing stupid things with lots of money. Now let's jump into these charts. We see stocks and gold are up for the day. Bonds and Bitcoin are down. Let's jump into the charts. I have the trade execution summary for you as we look toward Monday. We see, of course, the S&P swamping down this week. Again, it was up a little over 0.5% today, but for most of the rest of the week, things were down. You can see where it just jamming down after hitting the top and running along for a while. It didn't get energized and popped up. It went down. So where are we as we go into this next week on the S&P? Now, I'm not using the 20-plus day calculations. We're instead looking at the 5-plus day, and we are still short on the S&P. Probability of a short direction, 65%. We see support at the 548 mark. We see resistance at the 575 mark. We are right there at 575.92. And that is, of course, where we see our resistance at the end of the day. An aggressive entry point is 583.77. Strict entry point is around the 575.92. We expect a $20 to $25 move. And again, for the aggressive entry, about a 70% accuracy, 75 on the strict. Now, keep in mind, it's only a 65% probability it continues to go in that direction for that dollar move over the course of this next week. If these numbers, you don't have to be writing these numbers down. If you're a subscriber at chartingwealth.com, we will upload for you. You'll get in the email every day the trade execution summary grid for each coming day. So just go to chartingwealth.com, sign up. That list is never spam, never shared, doesn't cost you anything. If you want to support us at Patreon, that's a whole nother matter, whole nother bunch of stuff that you get. But please at least go to Charting Wealth, sign up. You get all these numbers and everything. So that is where we are over the next 5+ days. As we roll into this new week, we see about a 65% probability of a downward short direction. We gave you the strict and the aggressive entry points, and we gave you the accuracy background check. So again, the back tests that we ran on them and the percentages. That is important. Now again, is that super high? No, it's not. I mean, the accuracy getting up there around 75%, if indeed it goes short, that's good. But again, we can get better, and I hold out for better. What do we see with the Qs? Well, as we move on to the Qs, we can see it was up more for the day. It was up 0.74%. You can see where most of that occurred. It looks like at the end of the day, looks like it really bounded down in the morning, recovered some in the afternoon. But again, look at this unbroken line starting on the 2-day candles on Monday, the 24th of February, just marching down as volume down has accelerated, with the highest point being the last 2 days. You know, again, big drop off on the NASDAQ 100 as things have hammered down on the weekly chart too. Price well below the weekly trend line on the half-day and the 2-day and the weekly. We're only about 60% short there. The support we see is at 481.15. The resistance is at 491.22. And we see, 491.71 is the resistance, which again is right where the market closed. As far as the aggressive entry, 499.22. That is, again, letting it move up to that and then start to move over, going down. Strict entry is $491.79. Expected move, $10 to $15. The aggressive entry, about a 75% back test of accuracy, and 65 rather of the aggressive, 70 of the strict. Now, that is where we are with stocks. Again, decidedly negative as far as price movement goes, giving the ability to jump into what short positions. And those of you who are not familiar with what we love to track around here, what we talk about all the time is when the market's going down, there is an option to puts. Now, we do have great, if you like options, then of course, hopefully you've taken our options training course. That is available for free at any of the 3 support levels over at our Patreon page. You get the 3-part series, Options Made Simple the Charting Wealth Way. Recommend it to anyone. But when it comes to options and not actually trading options, but options that you might make on going short, if it's on the S&P or the NASDAQ, check this out. This is a simple ProShares short fund. And look, lo and behold, it is the short of the S&P 500, single short, and it moves up in the opposite percentage of the S&P 500 moving down. Is that not brilliant and beautiful? Now, it does have costs associated with it. It recalibrates each day. You can magnify your losses, all sorts of stuff that you need to learn by doing what? Practice trading and or fractional trading. Look at the cost of the shares, $40-something. You could buy 2 shares for less than $100. You could practice your entry and exit points. You could do all sorts of things to learn by doing and see how well it actually works for you. Because in so many of these things, it's up to you as to what you like, what you don't like. Let me show you another. And there are others, not just these. PSQ is the single short of the NASDAQ. That first one was the S&P. This is the NASDAQ. And look at that, lo and behold, as the NASDAQ was moving down moving up 0.74%, we see right here the opposite setting up on PSQ. It was moving down 0.74%. So again, it's just beautiful. These are they use derivatives to basically produce the opposite effect of what's going on the underlying fund. Now you might say, Tom, when we go to bonds, we're going to look at bonds here. When we go to bonds, is there one? Yes, there is. It's TBF, Tango, Bravo, Foxtrot. I have these things memorized. And of course, you can see as bonds have been going up, Tango, Bravo, Foxtrot, which is the ProShares short 20-plus year Treasury bonds, it has been going down. So again, you have options. Don't really have it on gold because DGZ is not very liquid. We do have it on Bitcoin. Did you know that? There is BITI. And again, you can see it's fairly liquid. You can see the sell price, $25.58. The buy price, $25.66. Remember, you always pay the higher and you sell at the lower. So if you're buying, again, it's just a few cents apart. So it's always good to check liquidity. You don't see the liquidity in the gold inverse. And that's the reason that when we are dealing with gold, we want to practice trade puts for that. Now, let's jump into where we are with 20-year U.S. government bonds. We are long on those, about 70%. In fact, we've got an A setup on U.S. government bonds. You can see where we have been going up. We did have, again, a down 2-day candle. It's sitting right there, piercing the weekly trend line. You can see where things popped up in the morning and then rolled over a little bit down in the afternoon, but we are still long bonds, 75% directional probability. Support is at 90.11, which is where we are now. Resistance is at 93.34. Again, we see our aggressive and strict entry points around the $91 and the $90 mark. We have a 75% backtest accuracy on the aggressive and a 80% backtest accuracy on the strict. So that again is one of our A+ ratings with the highest of probabilities in backtest accuracy plus lower volatility. And we think it is ideal for a 5+ day trade in a risk-off environment. So again, something for you to think about in a practice trade. Remember, we're not a stock calling service. We're not a Bitcoin or bond or gold calling service. We're an education firm. I want you to practice trade with us. Prove this to yourself by doing it, but not by losing your ass, which you can easily do when you don't know what you're doing and you're learning. And you know what you'll do even worse than that, because you can always make money back. You'll destroy your confidence, and you will be one of those people that said, stock market's fixed. It's like gambling. There's no way to win. My friends, I'm giving you statistics and odds. I'm showing you these charts. Can you see these nice clean candles and up movement? Can you see? You think you could make a binary decision of buy or sell? You think you could do that? Do you think that's impossible? Is it so wacky that it's just not possible to do? No, it's not. So again, practice this, learn it. Learn by doing. Let's move on to gold. Now, gold is our A+ setup. It offers the highest of probabilities and backtest accuracy. Get this, gold, long on gold. We were just barely up 0.05%. You can see where gold moved up during the week and then the last few days, starting on Wednesday morning, just sort of sliding over and down a little bit. But nonetheless, we are long on gold as we go into the new week at 75% probability. We've got support at 268.39, resistance at 270.34. Aggressive entry points are right around the same, right around the $68.72, $68.39 mark. 80% on the aggressive, 85% on the strict entry points as far as our backtest accuracy. And again, that is using these same types of entries and bounds that we have set for where support and resistance is, what has worked in the past over the last 12 months. So again, I just urge you to practice trade it, see how it works for you. Doesn't cost you anything but some time. Now that's where we are on gold. Now we go to Bitcoin and the odds go way down. Short is about 55%. So 55% that Bitcoin will be going down over the next 5+ days. We see support at the 22.59 level. We see resistance at the 24.60 level. The aggressive entry point and the strict entry point, 25.09, 24.60. And again, about a 60% backtest accuracy on the aggressive, 65 on the strict. So again, just, pay close attention. It's important. I've got some advice I want to throw in here. Strict versus aggressive. Strict entries have higher accuracy, 65 to 85%, but require waiting for confirmation, where aggressive entries provide earlier points with lower win rates between 60 and 80%. Risk management, the ATR-based stops, and risk parity sizing cap exposure. And again, I set up for myself, I didn't share this with you, but I set up for myself. If you guys want me to start sharing this, I've told you in the past that my typical trading amount is $100,000, and I use risk parity sizing to help me cap my exposure. So that caps it at about 5 to 15% per trade based on volatility. And again, for our backtest accuracy, we are simulating the Heikin-Ashi patterns and the ATR trends. So again, practice trade it, see if it works for you, and let's just keep having fun together. Always love to hear from you. Appreciate Robert reaching out to me, one of our Patreon members. Wanted to know how we were coming up with our support and resistance levels. He might have gotten more than he expected because we gave him a great deal of information. If you're interested, again, just write us. I'm happy to share all of that with you. There's a lot involved in those calculations, but we'll sure share it. Way you reach us, cw@chartingwealth.com. God bless, my friends. All the best from Charting Wealth.